Today I am going to explain about the journal. Journal is a record that keeps accounting transactions in chronological order. Chronological order means that according to date wise. Recording the transactions journal is called journalizing. This recording is made according to certain rules. These are the certain rules. Capital accounts increase in the side of credit. It decrease in debit side. Liability accounts increase in credit side, the same way decrease debit side. Income accounts, it increase in credit side, it decrease in debit side. The asset accounts as well as the expense accounts both are increasing in debit side and decreasing in credit side. Let's go to an illustration. Let's go to first transaction. 1st January 2011, Amuda commenced business with the cash of 50,000. In this case, Amuda brought 50,000 cash to the business. So, cash of the firm increased 50,000 and capital of the firm also increased. $50,000. Narration. Being started business with capital. Next transaction. Second one is in 2nd of January 2011 purchased goods for cash 10,000. In this case we are purchasing goods and paying cash, so cash reduce. Purchase is an expense type of account, so purchase increase 10,000 and cash reduce because we are paying cash. $10,000. The narration. B purchased goods for cash. Next transaction. 3 January 2011 goods purchased for credit 6,000. Let's record the entry. Again purchase increase. But in this case we are not paying cash, we are purchasing on credit term, so again the creditor will increase. because creditor is an liability type of account. So it increase in credit side. The narration being purchased goods for credit. Next, transaction. January 5th, 2011 purchased furniture for 2000. The furniture is an fixed asset. So in this case, the furniture is increasing in firm. So furniture account data to cash. The narration next transaction. It says 7th January 2011 sold goods on credit term 5000. When we sell the goods on credit terms, it creates the debtors. Debtor account data 5000 to sell is an income account. Sale increase 5000. Being goods sold on credit. The date is 7th January. Next transaction. 9th of January cash sales 4000. In this transaction made on the basis of cash. So in this case, cash increase, firm receive the cash by selling the goods. cash account data 4,000, to sales account 4,000. The next transaction. In 12th of January 2011, paid to creditors 3,000. When we pay the amount to the creditors, creditor will reduce. So creditor is a liability type of account. When it will reduce, we have to record the amount in debit side of creditor. We are paying cash, so it will reduce the cash. The narration. The last transaction. 15th of January 2011, paid salaries 2,000. In this case, salary account and cash account related. When we pay the salary, at that time cash reduce. Salary is an expense type of account, so when it increase, we have to record in debit side. Salary account data 2,000, to cash 2,000, being paid salary. Thanks for watching video. If you like this video, please press the subscribe button and press the bell button, so you will get our new upcoming videos. Please, if you have any doubt regarding this subject, comment below.